The Pi network is struggling with irrelevance. There's less and less attention on the asset, and because of that, the valuation of the project went down as well. Something that has all the attention, that has all the eyeballs, tends to get more potential buyers. Pi network is not in that situation. The question is this potentially an opportunity? Because crypto is all about buying low and selling high. Pi tends to be rather low right now, so maybe there's something that most people overlook. Let's have a look at the data most people are not considering. Now let me show you my view data on various Pi network related videos. Here's the very first one, published 294 days ago. That video outperformed the average video very much. So the gray area, this is the average video on this channel, and this blue line, that's how many views that particular video got. Now have a look at the follow-up video. Now the blue line is getting closer to the average video. It still outperformed the average video, but it's getting closer. It's not outperforming as much. Another video, now it's becoming more of an average video. Another video, it's going down further. And here's another one. This is now an underperformer. So we can clearly see that there is less interest in the Pi token over time. And that then leads to this price development. We are looking at the Pi price relative to the rest of the altcoin market. Initially, we had a very nice rally of more than 200%. Then came the crash though of more than 93%. What once used to be a hyped project then came crashing down. And the question is, why did it crash down? Yes, we have less and less attention, but it seems like a lack of buyers is not enough for a price to go down that much. There must have been some sellers as well. We're going to talk about this in a second, but here's a potential opportunity. We are consolidating since the 10th of October. The price tends to now do better than the rest of the altcoin market. Are we at a lower end of a positive trend now? I always like to look at these relative valuations because it balances out the overall ups and downs, right? When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well. When Bitcoin and Ethereum goes down, most altcoins go down. So when we look at Pi relative to the rest of the altcoin market, we actually see what's idiosyncratically going on with Pi. Now, it was not necessarily a surprise that Pi network went down after the initial launch. The market cap hit $13 billion. Now we are below $2 billion. It's very hard to grow beyond such a level. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. Still, even with those 1.7 billion in market cap, it's by far the largest mobile mining cryptocurrency. But always we have to ask ourselves, why did Pi go down that much? What was the driver of all that selling? One answer could be tokenomics, right? We've got 20 billion through pre-net mining rewards. The mainnet has already launched. We've got the mainnet mining rewards, that's 45 billion. We've got liquidity pool reserves, and then we've got tokens that are officially even allocated to the team and to marketing, etc. 10 billion tokens. Now there's some marketing speak around this, right? 80% locked for a 3-year vesting period to ensure price stability. But really what this is ensuring is just constant sell pressure over 3 years. When there's tokens hitting the market with a vesting schedule, those tokens will get sold off, and that's also what's contributing towards this negative price development. There are 8.4 billion tokens that have migrated, and apparently this is even counted as circulating supply, but there are locked mining rewards. So how can something that is locked be circulating? I don't understand it. I think this will all hit the market at some point, more than doubling the supply. How will this hit the market? That's unfortunately not transparent. Because here's the thing, there were so many problems around the KYC process of Pi. How did Pi become so popular? It's because everybody could download the app, could then mine using the app in the hopes of afterwards to claim some Pi tokens for free. This is how there was so much viral marketing. There was affiliate programs as well, etc. But then many people that clicked on the app every single day in order to mine, they were not able to claim their Pi tokens because they got stuck in those multi-layered KYC process. And so what happens to those unclaimed tokens? It's not clear. Will this go to the team? Will the team cash this out for themselves? Will this go to marketing? Will those tokens get burned? We simply do not know. And so there is this sort of Damocles that is a lot of potential sell pressure. If there's really only 3.4 billion tokens that are currently unlocked and circulating out of a maximum supply of 100 billion. That's not pretty. I'm also wondering how much of the payment data from the Explorer is actually natural. There's so many transactions, but many of them are very, very small. Multiple transactions just transferring one single pi. And again, a pi token is currently worth only 20 cents. Why is this all happening? Is this all just automated, artificial activity? Or is this organic? I've got my doubts that it's 100% organic. There's no good transparent statistics anywhere around Pi network, and that's probably also why the centralized exchanges tend to avoid the token. There's not much trading volume. We've got a bit on the perpetual futures, 10 million in the last 24 hours, but on the spot market we only had 3 million, much less. The project doesn't even have a direct listing on DeFi Llama, and its perpetual futures are not registered on CoinGlass either. The Pi community was so excited that the token might get listed on Binance. That, however, never happened, and it's unlikely that it will ever happen. Is the price momentum around Pi improving? Yes, of course it is. But is it worth the risk, given that we've seen that much sell pressure in the past, and given that we don't really know where the sell pressure is coming from? I am not so sure. I'm personally staying away. If you wanted to get into Pi, at least set a very tight stop loss, because if we fall below that support, we might very quickly drop by another 30% and then potentially go even lower and continue the long-term trend. In the end, such a project with that little transparency around its supply is not necessarily worth 1.7 billion. It could very easily fall below 1 billion and maybe go even lower than that. Now, there is a reason why the altcoins are performing so poorly, so consistently. It's not like everybody is taking profit. It's rather people like this, venture capitalists that invested in various crypto projects very early on. They got a lot of token allocation. That token allocation might unlock over time. And whenever tokens unlock, the VCs, the venture capitalists, they simply sell. It's a massive problem for the altcoin market. Every week we see hundreds of millions of new tokens from existing projects hitting the market. It's currently at around 600 to 700 million. Some weeks it rises above 1 billion. And the fundamental problem really is that there's not enough buyers for all of those new tokens. We can see this not just here on the macro, we can also see this in the micro. Here are a few examples. This is WorldCoin. WorldCoin is supported by Sam Altman, and there are token allocations for investors, token allocations for the development team. The number of tokens is going up constantly. And so WorldCoin relative to Bitcoin after the initial hype is just constantly going down. It's not a coincidence that WorldCoin crashed by 97%. Or check this out. This is ZK Zinc. Also has an increasing token supply. Again, investors are getting their tokens unlocked. So does the team. And here's ZK Zinc's price relative to Bitcoin's. It has fallen from the top by more than 90%. We can go on and on. Here is Starknet with a lot of entities getting new tokens. Here is Starknet relative to Bitcoin. Here is Eigenlayer. Here is the eigen price relative to Bitcoin. And what we are looking at here is relative performance. So it's not just that the market in general is going down and Bitcoin has fallen by 30 or 40%, and that also pushes down the altcoins. No, it's the altcoins performing much worse compared to Bitcoin. So when this relative valuation is going down and Bitcoin has fallen already by 30%, the altcoin has fallen by more than 30%. Again, this here is no coincidence. It's the insiders that are dumping on the average retail investor that doesn't really know what's going on. Now here's what I do in order to benefit from all of this. Let's go again to the Eigenlayer price development. Just as an example, right here we still have a lot of token inflation coming. So very likely this price will continue to fall further. So what I'm going to describe is very likely going to be a profitable trade in the next months. Instead of trying to buy the Eigen token, we can do the exact opposite. We can bet on the underperformance of the Eigen token. So we're just flipping this chart. Then it looks like this. Now what we see here in orange, that's the Bitcoin price over the time. So this kind of strategy does outperform just buying and holding Bitcoin by a lot. And again, It's not just random. It's not a coincidence. This is structural. It's because of the venture capitalists dumping on everybody all the time. And so we simply take advantage of that. Whenever a venture capitalist is selling their vested tokens, we are making money. This trade, for example, made roughly 1,300% in the last 12 months. So what do we need to do? We need to bet on rising prices of Bitcoin and falling prices of Eigen at the same time. So we're opening two positions, long BTC, short Eigen. And the reason why we want to open both of those positions is that we still have all of that correlation within crypto, right? So if Bitcoin was to suddenly rally by 20, 30, 40%, the Eigen price is likely also going to go up. It's simply just going to go up less. So when Bitcoin goes up 40%, then Eigen might go up by 20%. It still has the selling pressure by the team and by the venture capitalists that will, relatively speaking, depress the price. But the US dollar price itself might still go up when everything is going up. That's why we want to make the delta trade here. We go long Bitcoin, we go short Eigen. We don't just go short Eigen in itself. I'm following this kind of strategy already for 4 years. In the early days with borrowing and lending platforms, recently more with perpetual futures trades. But what we see over here, that's my alpha, my outperformance, my monthly outperformance versus Bitcoin in a given month. So some months I might still make losses because again, even that trade doesn't always go up. So if you shorted Eigen over here, you might have to wait for half a year to actually get in profit. So there are some negative months, but it's about the general trend. The dotted line here, that's my 12-month average. If we average out all of those dots, we come to a monthly outperformance versus just buying and holding Bitcoin of 1.9%. So on average, after fees, I make 1.9% more return than the average Bitcoin hodler. And that's with very conservative risk management. Here's my portfolio. This is not just trading. This is also dollar cost averaging into the trading account. And then I wanted to prove this directly in the market, not just showing here my results, but actually trading for the community as well. So in July of 2025, I opened up a community pool. The premium members, the annual premium members of Bitcoin Strategy, they were able to deposit into that pool. The capital pool had several $1 million under management. And while Bitcoin, during the time period, so we closed the pool just a few days ago, lost 24.9%, we made 17.3%. So over the last 5 months, we made more than just 1.9% alpha per month. And again, this is not just random, right? This is just working with the market structure, working with all of those cash outs that happen in the altcoin market all the time. Here are a few more details around that first copy trading pool. The average depositor in premium put in 17K. In the end, there was 20K in balance, so 2.7K in profit, 13.4% of average return. Now, why is this lower compared to what's shown over here in the chart? It's because most people did not deposit from day one. Many people waited to first see some positive performance and then afterwards deposited. That's why the performance from day one to the closure of the vault is 17.3, but the average member only made 13.4%. Then there is the 10% fee, so that comes from the platform. We use the Hyperliquid decentralized finance application. Still, when we annualize all of that, because this only ran for 5 months, this is 40.81% of return. Independent of the general market, right? We made money when Bitcoin went sideways. We made money when Bitcoin went down. We do this independent of where the general market is going. And again, the reason why this works is because we bet on rising prices of one asset and falling prices of the other asset. So when the general market is going up, then one of our positions goes up, the other position goes down. So this cancels out all the time. So the general market doesn't have any impact on this portfolio. The only thing that has an impact on the portfolio is how the altcoins do, relatively speaking, to our hedge. Now there is a new copy trading pool starting in January of 2026. So if you want to be part of that pool, there's a dedicated video in premium that also explains everything in detail. How to deposit over there, how much capital should be deposited, what are the risks, what are the fees, etc. If you want to get access to that particular video, you can also message me directly. I will then send this to you. So this is all part of the premium membership. If you just want to manually copy trade what I do, I announce this to every member so you can can simply sign up for the monthly membership. If you want to be part of the copy trading vault, then you have to subscribe for the annual membership. You do save $250 per year subscribing annually, and you will get access to the automated copy trading as well. Every trade that I make will automatically be mirrored. And while I cannot promise that we will reach again 40% annualized return, I will work very hard to make this project a success again. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.